Thanks.
Started.
Hey everyone, thank you, Sarah. Again, I'm Maurie Munro. I'm the Vice President of our Enterprise Sales here at TNS, and certainly excited to help you better understand the authenticated and branded calling solutions we have here. I think it's certainly really applicable to today's technology of inbound calls and the fact that the exploited use of those calls results in quite a bit of spam and fraud that Jim and I are going to kind of give a rundown and help you better understand how it impacts you and how you can solve for it.
Yeah, thank you. And I'm Jim Tyrrell. I'm, as Sarah had said, I'm the Vice President of Global Project Strategy. I presented at other CFCA events as well. So I think hopefully a good deal of you know me, but want to get into what we're going to discuss today, which is, that voice calling has the trust in voice calling is really eroded, and that's due to unwanted and nuisance calls, fraudulent scam calls, and there is a growing concern of call number spoofing, and we'll talk about then the real world deployment that we've done in the United States with branded calling, call authentication, and spoof blocking technology. We'll bring it to life, and then take Q&A after that. So that's what we have on tap for the session. So how is trust in voice calling been eroded? I think if you look at the data from the FTC, it shows that U.S. consumers lost more than $10 billion to fraud in 2023, and I think we tend to become a little bit numb with numbers when we throw them out, but 10 billion is fairly significant. It marks the first time that fraud losses have reached that benchmark, and it's a 14% increase over reported losses in 2022. Unfortunately, for those that may have been at SIPNOC last week, the numbers are probably vastly understated due to victims not wanting to identify that they've been a victim of the scam. So the numbers are probably even bigger. And in terms of the global picture, a new study from Juniper Research found that subscriber losses to fraudulent robocalling will exceed 76 billion next year, which is up from 64 billion. And I'm sure, every day, millions of unwanted calls are being made around the world. In fact, I wouldn't doubt if you get one while you're on the call today and get a little bit distracted. When we turn to fraudulent, scam calls, I think these are, unique to the United States, but I don't think they're that unique to, the other countries in the world as well. I mean, Amazon is a household name in America. It's accumulated well over 50 million subscribers, and scammers like to use its popularity to defraud shoppers from their, through phone calls, text messages, emails, and they've been doing that for several years. As an example, you may get a call that says something like the following: that this is Molly with Amazon. We've detected suspicious activity on your Amazon account. Someone's trying to buy a $799 iPhone on your account, and obviously, that's not true. It's a way to try to get your personal information. I'm sure many of you have probably heard this one or a similar one. I know I've gotten my iCloud account's been compromised from Microsoft. So, again, the scammers, try to become, very, very, timely around, what's going on. So, that is certainly a challenge. And then from a package delivery scam perspective, whether it's Amazon Fresh, DoorDash, Grubhub, or somebody else, or your new swimwear or that arrived for summer, we're all used to receiving these updates on our packages that are coming to us, because we do a lot of online shopping, and so we've seen phishing scams where scammers pose as the U.S. Border Patrol agents or U.S. Customs and Border Protection officers contacting you about a package that has your address on it. And again, they're trying to get your personal information. Similar to the tax scams, which are no different. We see the same ones kind of reappear every year. Bad actors, claim to offer tax debt relief services, and they're driving much of the robocall traffic during the tax season. And then certainly from a bank impersonation scam, those continue. We'll get into a real life example that Maurie will highlight a little bit later. But what's even more interesting is that AI is being more widely deployed, and it's hard to tell whether it's a synthetic voice or not, and versus a real human being. And I think everyone has probably heard about the deep fake scam that used Joe Biden's voice during the New Hampshire primary that was in February. Basically shows that scams are becoming more sophisticated, and more challenging to to fight off the bad actors. So, with that, we do see, it's easy for bad actors to take publicly facing numbers, certainly like the toll-free numbers that are on the back of a credit card, and pretend to be that financial institution so that they can then, try to defraud their unwitting consumers. So, again, a bad actor illegally uses the number of a legitimate organization. They interact with the known victim and they think it's a trusted source, again, such as a bank or insurance firm. And unfortunately, the businesses are probably unaware that how often they've been spoofed, or that they've been spoofed at all until it's too late. And their reputation could be harmed. Customers could be defrauded. In some industries, fines could be employed as well. And unfortunately, with U.S. adults, here are the numbers. 92% believe financial services organizations should be taking all the measures available to them to protect consumers, and almost the same amount believe that businesses should do more to protect consumers. So it's becoming a real, I think, certainly within the U.S. and probably outside the U.S. as well. I think the consumers are kind of throwing up their hands as to what can be done to stop all of this unwanted and fraudulent traffic. So what I want to do is turn it over to Maurie, who will walk through then a real world deployment that we've actually seen. So I'm going to stop talking, Maurie. I'm going to turn it over to you.
Thanks, Jim. And we witness in today's technology an evolution, not just of our own use of technology, but the experiences we have associated to fraud. We all know, if we go back even 20 years with email and certain characteristics of it, that's where the attacks may have targeted. We saw it then kind of move into the office environment, and as it has evolved, why not go after the singular device we use and trust the most while we begin to lose trust in it? It's the cellular phone and the inbound calls. And as that's become a distrusted technology, the inbound call, businesses and enterprises are suffering as a result of it. That's their key to talking to their customers. And businesses recognize they have to do something to overcome it. Now, while they may not be at the stage of branding a call or authenticating a call, the key component is that somebody else is. Somebody else is out there representing them. If you don't represent yourself, if you don't go out there and put the name of your company on your outbound calls, you'll often find a bad actor is willing to do it. And the destinations they cherish most right now, and the use case that I'm going to walk you through, is a financial institution. Well, of course, if you represent yourself as a financial institution and you're not, if you can convince the individual on the other end of the phone to answer the phone through whatever mechanism, they happen to be able to insert their name, although they're not an authenticated call, and that person answers, they could convince them of some event that would cause fear and through that, they could solicit money. So when we look at this actual event, a very impressive use of technology. Now we made through our expertise in certain communication methods understand the term omnichannel. That just means that you might choose to text somebody, email somebody, you might choose to call somebody, maybe use an application like WhatsApp. What I'm going to allude to here is, what if you combine those into a user experience for the destination consumer in a way for fraudulent purposes, you layered the experience. Case in point, if I texted you, even if I emailed you, but let's say I texted you, hey, by the way, I'm with this financial institution, and our records are showing that there's some negative activity on your account. I'm probably not going to get your attention. You'll see it. You may not believe wholeheartedly that something is actually happening. You have some level of suspicion. But in the advanced thought process here that we're kind of walking you through, what if I called you in 5 minutes and you saw the same name as the text that you briefly read? You're thinking, wow, these guys just texted me and now they're calling me. There must be a problem. And at that point, they've got you. They get you on the phone, you answer. Now, what I want to underscore is they injected a name of an institution you recognized in both cases. And through that, they gained your trust. And ironically, they did it with the same tools we want to use, but we want to take it one step further. And I'll explain how we get to that step to discount this ability for the end customer to be defrauded. Now, as you get the text and a follow-up call, you answer, and through what, 1% hit rate, 2% hit rate, over the course of a weekend, just getting a couple people to comply with the ask. Maybe it's, hey, can you Zelle me some money? I just need to confirm that it is in fact you. I'll send it right back. Well, how often do you think it's sent back? So at that point, the defrauding has taken place. And if you can get a hit rate of 1 or 2%, that added up to almost $3 million over a weekend for a financial institution that was not making those calls. But guess who the customer associated the problem with? Not the person defrauding them, the name of the financial institution that was on the actual outbound call, that was on the SMS text message. And so who do you think they're upset with? All the while, the financial institution is not really, at the end of the day, complicit. Genuinely. Now, we know that as end consumers, we're going to look to them to protect us. That's your financial institution. So when it comes to these organizations, this vertical, if you will, of enterprises that represent financial institutions, it's almost an obligation for them to expand their technology, expand their capability, utilize something called an authenticated call. And in authenticating calls, they can also create a defense mechanism from somebody representing themselves as them. That's a key component, because if you could hypothetically put a firewall in your network, you create a defense mechanism. Why can't you do that with an outbound call to your consumer? You can. TNS represents that technology that allows you to create an authenticated path. You can then inject the associated brand name and eventually evolve that into, if needed, a logo, all the while ensuring your customers get the representation of who you are and the calls that are actually you. Now, you may ask, well, how, if they were able to make the call in the first place as spoofed, as representing themselves as that financial institution, those calls we actually stop because they don't represent the full authenticated path. So it has to, this is important. This is a game of whack-a-mole. You guys know that you go fix one thing, they come up somewhere else. But in the case of these inbound calls to consumers, you can put a name on there, and the name represents a certain level of trust, right? But that can be circumvented. Well, what if it's critical it's not circumvented? What if that name has to be who it says it is? What Jim and I are here kind of to represent is you can elevate it a notch, you can authenticate it, and then that way you can stop the bad actors from portraying themselves as the entity that effectively they're not. So when we go into these levels of protection, certain enterprises definitely need different levels and are more susceptible to the financial pitfalls that their customers could unintentionally be victimized. And what I want everyone to realize is we want to get solutions into enterprises, and in doing so, pick the right level of security, pick the right level of trust, and all the while, customers who maybe see a logo will begin to understand that that's an authenticated call. That's a trusted call. And then if they answer it, they're not suspect as to whether or not they're going to be defrauded. So in the future, we will probably see a default level of protection that TNS can provide. And by way of that, we restore something that 30 years ago we would have never thought it could get to this level. None of us answer. I mean, come on. We know that we've missed calls that should have been calls we answered. And through the repetition of that inbound call, maybe we finally answer. But this purpose that we serve is a restored trust to not just ignore the call, but to answer the calls we know have been authenticated. And through the protection that we deploy, it's discouraging to the bad actors that know that the reputation that's out there from a logo, even just using branded name, allows companies to once again reconnect with their customers and allows TNS to be a critical participant in this role to defeat the fraud that we all know will morph into some different level of exploitation, but we can at least solve, just like companies put firewalls in, just like there's anti-spam for email, or we're going to do our part in today's technology to stop and put some containment around inbound calls to your cell phones so that you can once again trust those calls again. Jim, I'll turn it back over to you here and kind of let you take it through some of these final slides.
Yeah, thanks, Maurie. I appreciate that. Yeah, as Maury mentioned earlier, with branded calling, you can put your name and rich content, logo, call intent. And again, we're only going to deliver that rich content when the call has been authenticated on the incoming call for the incoming call screen, which, as Maury mentioned, gives consumers peace of mind that, that the call they receive is from a legitimate source. So it really separates kind of the bad from the good. And, we've done some surveys as well. Let's say, 77% of people in the U.S. would answer a call from their bank if the brand and logo name was displayed on the incoming call screen. Maury mentioned, think about our own behaviors today, right? Nobody picks up a call from an unknown number. In fact, I think it's 8 out of 10 probably don't, but 8 out of 10 would, and you could then engage with with confidence as a consumer that you're actually talking to who you thought you were talking to when the call's authenticated. But rather than talking about theory, let's talk about what did we actually see from the outcome, right? In the first 5 months of using the service, more than 130,000 calls were blocked in the network, which I'm sure that the financial institution had no idea that their numbers were getting spoofed in that bad. And in fact, 1 month alone, it was 20% of the calls that were coming from their telephone numbers were blocked in the network. So 80% of the branded calls were delivered, but 20% weren't blocked. So that's fairly significant, and you know, it now allows the consumer to have more confidence that says, I know that it's this bank or this financial institution that's calling me. And so what they did from a branded calling perspective is over 800, you know, of those, I mentioned that 130,000 calls were blocked, but over 810,000 outgoing calls were branded during the first 5 months. And what happened there was in the third month after the implementation, we took a look at what their pre-branding answer rates were versus their post-branding answer rates, and it increased nearly. It We saw an increase in the answer rate, but more importantly, what we saw was the call duration increased by 14%. So what does that mean? It means that they're actually having more engaging conversations. The conversion rates that this financial institution is looking for, they're having more meaningful conversations. So the outcomes are better. So not only will their answer rates go up, they'll have to make less calls, and you know, from a soft value perspective, you know, it's going to reduce you know, the amount of calls that they have to make. It's also probably going to reduce the employee turnover that hey, you know, that I'm actually picking up a call, talking to a customer, and they're engaging more frequently with the enterprise. So again, I think this is, you know, kind of a win-win. Stop the fraud, and increase the outcomes for the bank. You know, it's a win-win situation for both the consumer and for the enterprise.
And Jim, it gets back to, like you said, the soft costs across all these different intangibles, the employees, the outbound calls, the customer experience. It's hard to monetize some of it because you probably couldn't say that somebody's peace of mind is worth a certain dollar amount. But the relationship that these institutions have with their customers is sometimes what differentiates them. And what if they can create something that has a certain higher level of trust, or a single call, outbound call that can stop an event legitimately before it happens? And in doing so, what if you're the person making those calls, and the frustration you have at one missed call after the next, that nobody will answer your calls? So this is a combination of all things that we took for granted 30 years ago. It was just commonplace that if you call somebody, either they picked up, and if they missed you, they missed you, you know. But now everybody's ignoring every call. There's a certain disconnect that these institutions have with their customer base. And when this can be implemented, and then you start to restore some of that trust and connection between any enterprise and their customers, it's going to have an impact that probably at a financial level probably can't be measured, but at a trust level is significant for the longevity that customer might have. So everybody talks about churn. What do you think this does for churn at the most basic level as an end customer? You're just going to stick around because you believe in that institution, and you trust them that much more. So, Jim, it's really so multifaceted that while we can't calculate it in true dollars, it's got a tremendous impact across all institutions and enterprises.
Yeah, thanks, Maury, for that. And now, you know, we'll turn it over to Q&A.
I have a question.